Craig to present to you on this discussion paper, Business Combination, Disclosure, Goodwill and Impairment. Just as a reminder to begin with, as with all our presentations, the view that you hear today are our own and do not necessarily represent those of the board or of the foundation. So as many of you might be aware, this project started off as the board's post-implementation review for IFRS 3, where we have heard feedback from stakeholders that they would like to see more information being provided in the financial statements on the subsequent performance of business combinations. Many have told us that they have expressed concerns that the impairment test of goodwill is costly and complex and that it does not recognize impairment losses on a timely basis. Some stakeholders think that the board should reintroduce amortization of goodwill, and also some stakeholders claim that it is difficult to recognize some intangible assets separately from goodwill in a business combination. So the objective of the DP is to improve the information that companies provide to investors within a reasonable cost, and to provide them about the information about the businesses that companies buy, thereby helping investors to hold management to account for their acquisition decisions. The board is mainly trying to seek comments from stakeholders on how useful or feasible they think some of those disclosure ideas are, and also whether they have any new evidence or arguments on how goodwill should be accounted for. The purpose of the meeting is to provide you with an overview of these preliminary reviews and also to seek your feedback. So I will just very briefly give you an introduction on some of the key aspects of the preliminary review, and as Tadeu has mentioned just now, after each major section, I will pause for your feedback or question that you might have. So based on the stakeholders' feedback that we have received, the slide here provides a summary of the board's preliminary reviews in the DP. So it covers three main areas that corresponds to the concerns that we have heard. The first relates to disclosure about the performance of business combination. The second relates to improving the accounting for goodwill. And the third area relates to some other relevant topics. It is worth emphasizing that the views in the DP, including the view to retain the impairment-only approach, are preliminary, and of course, depending on the feedback and comments that the board receives on outreach as well as comment letters, the board may decide to reconsider some or all of those preliminary views. So we'll first just very briefly touch on the preliminary views about the disclosures, which are summarized on the slide over here. So to respond to investors' need for more information about the subsequent performance of acquisitions, the board's view is to require companies to firstly disclose in the year of acquisition the strategic rationale for the business combination. This can be a high-level statement that links to the overall strategy of the entity, which some companies might have already included in their management commentary. Second is to disclose the key objectives of the specific business combination. And these are the more detailed aims that the management expect to achieve as a result of the business combination. And also to disclose the metrics and targets that management will use to assess the extent to which those objectives have indeed been achieved. And then in the subsequent periods, the company will then disclose the actual performance based on the matrices that it has identified, and that will enable users to assess the extent to which those previously identified objectives at the acquisition date are being achieved.
Y se me juntaron tres cosas que normalmente no le pasan en 20 años. Un divorcio de mi primer matrimonio.
Sorry?
One second, Dehao. That is one microphone that is open
Okay.
here. Just checking here, please. I think that is closed now. It's okay.
It's right.
Okay. Yeah. So perhaps we can just take a look at the slide 8, which is on the kind of information that companies would need to disclose in the subsequent years. So we know that there is a wide range of business combinations and they serve different purposes. So Therefore, the board concluded that there is no single matrix that would be suitable for every business combination. Therefore, what we are exploring is a management approach whereby the matrix that will be disclosed will be based on what the entity's management uses internally to monitor the achievement of the objectives. And because companies already have such information at the back of their hand, it would be less costly for them to produce, and also it will provide users with some insights to how management actually manage and monitor the acquisition. The board expects that such measures could be operational or financial in nature, or it can be a mixture of both. Specifically, when we refer to management here, we actually refer to the company's chief operating decision maker, which is a term that is used to identify disclosures required for segment reporting under IFRS 8. And the main reason why the board is suggesting using CODM as the threshold here in this context is so that companies will disclose the most important information about the most important business combinations. And the concern is that having a lower threshold might result in excessive and costly disclosures, especially for companies that may be making serial acquisitions. One thing that the board would like stakeholders' view on is whether they think using the CODM as the threshold would lead to companies disclosing all material information that users would need to know about the business combination. So the discussion paper also contains some other proposals for targeted improvements to existing disclosure requirements in IFRS 3, and they are summarized here. As this relates to existing disclosure requirements, the management approach that we have mentioned in earlier slides will not really apply here. And also all these targeted improvements will relate to the information that needs to be provided in the year of acquisition. For these improvements, company will of course need to apply judgment to determine the materiality of the information as they would for any existing disclosure under IFRS 3. The board's preliminary view is that companies should be required to first provide quantitative information about the synergies at the date of the acquisition. And of course, that is assuming that management do expect such synergies when they enter into the business combination in the first place. Second is to require separate disclosure about the pension and debt liabilities of the acquiree that the company has acquired. And third is also to propose to make some minor changes on how the actual and pro forma financial information that company disclose about the acquiree. So this is just a very brief summary of the board's view on the first part of the discussion paper, which is on better disclosures. So with that, I would just like to stop here for a while to see if anyone has any questions or if they have any comments that they would like to make. Thank you.
Thank you, Dehao. I don't know, Jorge, if you want to start or aquellos quieren hacer la pregunta sobre esa primera parte, que es sobre revelaciones. Si tiene una pregunta y quieres colocar en el chat, por favor, yo voy a mirar acá. Y Jorge, si quieres también hacer un comentario o alguien más que quiere hablar, por favor.
Tadeu, ¿quieres que ahora pregunta 4 o
Sí.
lo dejamos para... ¿Sí?
No.
¿De una vez?
Puede comentar la pregunta 4, que es relacionada con tema de revelaciones.
Revelaciones.
Sí.
Okay. Well, thank you very much for your presentation. We organized a technical group to discuss this discussion paper. It was made up of many countries, and it was led by my colleague Juan Gras, that I will ask him later when you finish to explain how this group has been working for the last few months. But regarding question number 4, the majority of our constituents agree with the proposal. However, there is some concern because they consider it would be difficult to quantify and to identify when the synergies will be occurring, when will be happening. Therefore, also there is some worry about what will happen with disclosing information that is confidential, and that the competition will be very pleased to learn what was the strategy of the company for one acquisition. And these kind of decisions very frequently are in some way secret. Is the competition is to acquire a new brand, is to participate in other countries. That is a concern they have. Regarding the request in question number 4 to disclose information in connection with liabilities, they agree with this proposal. This is general terms for our initial conclusion. And I say initial because this technical group has not completed the research. And we still have in the board, the glass board, to discuss the final response. But initially, those are the main conclusions.
Thank you, Philippe. Before we pass back to Dehao to speak, does anyone else want to make any additional comments?
Perhaps Juan Gras will be very helpful because he has been the leader with this group.
Well, the point is that to quantify the objectives and the synergies, this is something that cannot be very precise. Quantifying an objective, quantifying a synergy is not precise. A synergy will be a range of how much savings could be obtained with the combination, because of course there will be a saving in administrative expenses, in selling expenses, not very much in cost of sales. But these are some of the synergies expected, and also another synergy will be the growth of the business. How the two business cannot be adding them cannot be 2 but can be 3. Okay, so quantify those synergies is not going to be easy. When management will present that to the board, there should be figures, metrics in a range, not precise figures. Then that's one of the first issues. The second issue is that once those metrics have been determined, even within a range or something like that, what happens if you disclose them and the competition say, oh, that's what they want to do. Okay, I'm going to block that with this other strategy. And then this is something that many companies will not be willing to disclose that information, or they will disclose something that is very, very vague, very obscure regarding what is the objectives and the synergies. So it is a good idea, yes, but and maybe the financial analysts are eager to obtain that information, because the financial analysts always are pushing for more disclosures on what the entities are doing. But it will be something that in most of the cases, the information is going to be very scarce, that will be disclosed, is going to be very scarce, and in many cases obscure. to avoid that competition can take advantage of that. That is one of the conclusions that is part of the conclusions that we reached.
Bueno, Juan, muchas gracias. Tenemos alguna pregunta en el chat, no hay, pero si alguien quiere exponerla, nos piden la palabra y se lo damos.
Jorge,
Sí.
podría hacer un short comment.
¿Cómo no?
Yeah, thank you. Yeah, I agree with this proposition, and I'm very much in line with what we discussed till now at GLASS. And I think that it's very important that some additional disclosure or new disclosures be adopted in order to explain why a business combination occurred. I think is one key point. The second is to understand from the board if a business, if we don't have a synergy and a business combination occurs, this is a very important information that should be disclosed, but we cannot expect a synergy for all business combination because it can happen because of many factors. We have academic studies showing that. And I believe that when you have regulatory influences, or even if you are in a competition scenario, perhaps it's not necessarily a synergy will come up from a business come. So I think that the final end of this discussion should consider this point, because otherwise we are going to give the notion that the synergy is mandatory for all business come, which is not the fact in reality. The second point, I'm not very much sure that sensitive information should be disclosed. In other areas of IFRS, sensitive information is something that is considered as a matter of judgment from management, from the preparers, for not disclosing it if it is critical for the business. So we should keep this when we talk about this kind of information. So I think these are some specific comments I have on this. Thank you. Okay.
Bueno, no vemos pregunta. Sí, hay una pregunta pedida por Hernán. Te escuchamos, Hernán.
Gracias, Jorge. Thank you very much for the presentation. I have a question about the impact of the disclosure about the performance of the acquisition. And the question is if you are thinking about linking information on the performance of the acquisition with the need of impair the goodwill in subsequent period of the date of the acquisition. Thank you.
Can we ask Dehao already to take the questions and answer?
Yes, certainly. Can you hear me?
Yes, you can hear you, Dehao.
Okay, sure. Thanks for the question. So I guess there were some concerns among the participants over the disclosure of synergies. So I guess what the board's preliminary review is that basically we're following a management approach, although it's not necessarily for the synergy disclosure. But I guess what the board's view is that for the synergy disclosure, it is only required if the management, when they are entering into the business combination, they are actually expecting there to be a material synergy. So that is the same across all other kinds of disclosures, which also includes the pension and debt liability disclosure. So it's only if there is going to be a material pension or debt liabilities, if there's going to be a material synergy, then you would need to disclose that piece of information. So certainly we are not requiring companies to disclose that in all cases, especially in the case that they are not expecting there to be any kind of synergy. So on the issue of quantifying the synergy, I guess the board actually do recognize that synergy is actually can be quite hard to quantify in some cases. So I guess in the discussion paper, when we talk about the disclosure of synergies, it can be an amount for the synergy or a range amount of synergies which the company has come up with in their calculation when they determine what is the appropriate acquisition price. And also perhaps just a little bit of background on where the board is coming from. So based on our understanding and also our interaction with many users, we do understand that a lot of companies, in fact, at least for their major acquisitions, they do actually disclose some kind of investor information in investor slides and presentation where they do market their acquisitions, saying that they are expecting to achieve some kind of synergies, and very often they do also disclose the objectives that they are looking at. So where the board is coming from here is to really help investors to have some kind of follow-through process whereby whatever that's being disclosed by companies previously, it will be brought into the financial statements and it will be audited as within this auditing process, so that so that by having such information, you will be able to hold management to account for their acquisition decisions. And on the issue of sensitive information, I guess it was mentioned just now on the other IFRS. As far as I can recall, the IFRS that actually do mention about commercial sensitivity, whereby if there is sensitive information, perhaps disclosure is not required, is when it relates to a legal dispute in IAS 37, whereby it could potentially prejudice the legal outcome. That is when you do not need to disclose the information, but of course, by making such disclosure. So I guess that's only in very limited circumstances whereby IFRS standards would allow disclosures not to be made because of commercial sensitivity. And also one of the things that we have heard from many investors is that very often competitors do know a lot of what the company's plan are because they're actually competing with you in the similar field. So, and I guess there's also one question on linking the subsequent performance of the business combination to the impairment test as well. I guess I will probably cover that in the next part on the impairment test, but for that purpose, of course, I guess currently we are at this discussion paper stage. So as we move on to exposure draft stage, of course, the board will perhaps look at the issue more thoroughly, also consider whether there is a need to review and enhance the indicators. And of course, one of the possibilities is as what you have mentioned just now, is to potentially link the subsequent performance of the acquisition to the impairment test, such that when the company is not performing well for its acquisition, that could be a potential indicator that there might be some kind of impairment and that the company do need to perform a quantitative impairment test.
Thank you, Dehao. If I may also make a question, it's when we discussed about the sensitive information, and you referred to that some of this information is actually already in the presentations that companies are making to investors. In this type of situation, of course, we are talking about listed companies. When they have an organized sessions with investors, etc. But I suppose that all we are discussing here would be applicable to all companies, isn't it?
Yes, it will. Which is why I think sensitive information is of course a consideration that we have. But the thing is that because sometimes even for non-listed companies, they might do it through private placements, and they will also have kind of investor information. And sometimes for unlisted companies, they might have listed debt securities, whereby they will also have some kind of information that's being produced and available externally.
Okay, and considering the outreach that you have already attended before, how is this sensitivity issue come across in terms of comments? Could you just quickly comment on it?
I guess the view is being quite split among preparers and users. So on one hand, most of the preparers or many of the preparers have said that they are definitely to a certain extent concerned about potentially having to provide such commercially sensitive information. While on the other hand, from the user side, many of them do say that very often they already know about what the targets of the targets and objectives of those acquisitions are. So what they are actually hoping to see is to have a follow through on these targets, such that they will know whether those targets that were actually being previously mentioned to them are actually indeed being achieved or not. So that is the part of the information whereby they are not really getting at the moment, though not necessarily the targets themselves.
Okay, we have one question here in the chat. In Latin America, the separate financial statements is as important as, for example, the consolidated financial statements. And many of these individual separate financial statements are the basis for supervision and even payment of dividends. And because of this, it would be important to take also this into consideration in terms of the disclosure in this individual separate financial statements that are also covered by disclosure related to IFRS 12. That's one comment, and I echo this comment because individual and separate financial statements is a quite important issue in Latin America, where we have been applying the equity method when we are presenting these. And as is said here, it is the basis for many things, not only payment of dividends, but also for regulatory purpose. That's a good point in terms of when we're looking at the disclosure. Think about what would be the impact in this individual separate financial statements as well.
Can I just also just check with you in Latin America, when you say many companies do actually have to present separate financial statements, how is this financial statements presented? So is it like, do you have like a column that says this is the consolidated figure, this is the separate figure, and being presented in one FS, or do they present different financial statements?
I can tell you about Brazil. Brazil, it's usually when you have to prepare consolidated financial statements, it is in the same set of financial statement. Then you have the column for consolidated and the column for individual financial statements. I don't know about the other countries. I don't know if anyone want to comment. For example, in Argentina, Jorge, is the individual financial statements presented separately from the consolidated financial statements or together?
Se presenta junto, pero en documentos separados, lógicamente.
Okay. I think is there any other country that the situation is different, or usually separate financial statement, despite it is made available, I believe, all together? Is it the general idea? I think so.
Well, in Mexico, the separate financial statements are just presented at the stockholders meeting. They are not published. What is published is the consolidated financial statements with the management commentary and something else. but these are only presented at the stockholders meeting to comply with the legal requirements. Okay, so it's something that is really of no importance in Mexico.
Okay.
But I understand that in certain countries, in Central America, and only Colombia also, the decisions for dividends are made on the individual financial statements, because the individual financial statements are the ones that present profits that can be distributed. So that is the importance of individual or separate financial statements. That the dividends have to be based on the profit shown by the separate financial statements. Even if it's the same profit, even if it's the same profit that the consolidated, because they are prepared using the equity method, there has to be, according to law, the separate financial statement.
Okay. Thank you very much, Juan. I think that's quite helpful, this information, that as far as I understood, basically Mexico would be more for attending legislation, but the financial statements, the consolidated financial statement, is the one that is actually the basis for investment, and it's the one that is made public and available in general. But one point that is important as well, from practical terms and maybe theoretical as well, is that if you have to prepare consolidated financial statement, you have to, even if you publish separately the individual financial statement, you have to indicate that you have prepared consolidated financial statements and make reference. I mean, that just trying to minimize the problem of the disclosure, I believe you still have to have this information in the consolidated, and then you make a cross-reference from the individual financial statement. I don't know whether Dehao, I think.
Yeah, okay. Yeah, I understand.
In Mexico, the financial statements, the separate financial statements, indicate that they were prepared for legal and tax purposes, okay? And they are not suitable for other purposes except for those two purposes, okay? And that separately there are consolidated financial statements that are the ones that present the financial position, the results of operations of the entity, okay, of the entity as a whole, okay. So that is a disclosure that is made in the separate financial statements, that they are strictly for legal and tax purposes.
And one other comment: in Mexico, we use the equity methods. We do not use, for separate financial statements, we do not use the other two options in the IFRS's, cost or fair value. They use the equity method.
I think this is the general situation for Latin America, basically applying equity method.
Sí. Hay un pedido de comentario, Tadeu, de parte de Hernán, por favor.
Gracias, Jorge. Tadeu, have you considered that the problem about the sensitive information could be solved, including any requirement when an entity is a non-public entity is out of the scope of the requirement in the next standard? Similarly, like the IFRS 8 with the segment operating segment disclosure.
Dehao, would you like to comment that?
Sorry, I didn't quite catch that issue.
Yeah, actually, it's basically saying that similar to what we have for and now please correct me if I got it wrong. If similar to what we have for IFRS 8, that is required only for listed companies, for example, could part of this new required disclosure that we are discussing here follow the same route?
Okay, I think based on the discussion that the board had at the moment, we did not really consider the requirements only for listed companies. It's as it's being proposed now, it's basically as part of the overall disclosure requirements in IFRS 3 rather than just for listed companies.
Okay,
Thank
but
you.
it's a good point, and very good.
Thank you.
Bueno, no tenemos más preguntas, Tadeu, si quieren pasar a la segunda parte. No te escuchamos.
Sorry about that, because I was on mute. Sorry about that. Dehao, if you can go for the second part, just please do it.
Okay, sure.
Thank you.
Wonder if you can see the slides on slide 11. Sorry, because I'm not sure whether I'm displaying it properly.
Yeah, you're on 11.
Yeah,
Okay, thank
it's
you.
fine.
Okay, so now we'll just discuss the other main topic in the DP, which is on the subsequent accounting of goodwill. So there are two key pieces of stakeholders' feedback that we have heard for the impairment test. First, stakeholders are concerned that the impairment losses are often recognized too late. And second, that the impairment test is often costly and complex. So in response to this feedback, the board explored whether it could make the impairment test more effective at recognizing impairment losses on the acquired goodwill, and to do so on a more timely basis. The board also considered if it should reintroduce amortization of goodwill and whether the impairment test can be simplified in order to reduce the cost to preparers. So on the first issue with the late recognition of the impairment losses, the board undertook research in this area and identified two possible reasons for this too late issue. The first is that the cash flow forecasts made by management are often too optimistic. And second is with the issue on shielding. So on the first issue, the existing IAS 36, which is the board standard on impairment, requires management to use reasonable and supportable assumptions when they are making the forecast. Also, in addition, companies are required to disclose information about the assumption that were being used in order to provide users with information to assess the reliability of the impairment test. Therefore, the preliminary review of the board is that if the forecasts are too optimistic, it's more of an implementation issue, and that kind of issue will be better dealt with by auditors and regulators rather by changing the standard. So the second issue is on shielding and how shielding can reduce the effectiveness of the impairment test is shown on a simple illustration on the slide here. So impairment occurs when the recoverable amount of a cash generating unit falls below the carrying value of its assets. Recoverable value is measured either as value in use or value less cost of disposal. So when an acquisition is integrated into a cash generating unit, it may be shielded by the headroom of the existing business. The headroom, which is the amount by which recoverable amount of the CGU exceeds its carrying amount. The headroom can shield the acquired goodwill from impairment because any reduction in the recoverable amount due to the acquired business not performing as well as expected will first be absorbed by the headroom. And impairment loss is recognized on the acquired goodwill only after all existing headroom has been fully exhausted. So the board spent a considerable amount of time trying to address the issue with shielding using the headroom approach that incorporates the unrecognized headroom into the impairment test. However, the board's preliminary review is that it's not really feasible to design a test that is significantly more effective than the existing impairment test within reasonable costs. The board acknowledges that the test is not perfect. Because goodwill is unable to generate cash flow by itself, it has to be tested for impairment with some other assets collectively. And because of that, that inevitably will be some kind of shielding. This means that the test cannot precisely capture the decline in the value of goodwill. Also, the test cannot fully provide information necessary to capture the subsequent performance of an acquisition. And it needs to be said that the impairment test was also not designed to provide such kind of information in the first place. However, this does not mean that the test has failed, because if it is applied well, the test should be able to meet its intended objective of ensuring that the carrying amount of the CGU as a whole is recoverable. This means that the impairment test provides only part of the information and signal about the subsequent performance of business combination. And therefore, to provide better information about the performance of the acquisition, the discussion paper proposes the disclosure about the subsequent performance, which we have touched upon earlier. These disclosures are necessary to provide the more complete picture about the performance of the business combinations that many stakeholders have requested for. Many stakeholders have suggested the board that it should reconsider amortizing goodwill. Amortization, in their view, provides a simple mechanism that does target the goodwill directly. Accordingly, the board explored whether amortization of goodwill should be reintroduced. And it is perhaps just worth mentioning here that any reintroduction of amortization will also come with an impairment test included. The slide here lists some of the arguments for the amortization and also some of the arguments for the impairment-only approach which stakeholders have put forward. And the DP contains a fuller discussion of the arguments from both sides. So without going too much into detail, suffice to say that neither side of the debate has generated much in the way of significant new arguments or evidence. And supporters of each side remains divided over this particular topic. The board's preliminary view is therefore that it should retain the impairment-only approach. However, that was only by a narrow majority. Like many stakeholders, the board is also divided on this topic. And in the view of the majority of the board, there is no compelling evidence that changing back to an amortization model will significantly improve the situation that we are experiencing now. The board does not view this as a simple question of which model is better, but rather whether there is compelling evidence that a change is indeed needed. Given this narrow vote and held views of stakeholders, we will welcome feedback on this topic. However, we would certainly welcome new evidence or new arguments, or perhaps reasons why some of the previous arguments are more relevant now, rather than simply repeating some of the well-known arguments. Also, during the post-implementation review, stakeholders have told us that the impairment test is costly and complex. Many stakeholders think that some of the unnecessary costs are added by the requirement to perform the test even when there is no indicator of impairment. The board's preliminary review is that it should remove this requirement to perform a quantitative test annually. However, companies will still be required to assess at each reporting date whether there is an indication of impairment and do perform a quantitative test if such an indication does exist. The board thinks that there is likely to be a material impairment loss in the absence of an indicator of impairment. The same approach will also be applicable to intangible assets with indefinite useful lives and intangible assets not yet available for use. Also, the board considered the removal of some of the existing restrictions on how value in use is estimated. And hopefully that will make the test more cost-effective without reducing the informativeness of the test. The board's preliminary review is that it should remove the requirement in IAS 36 to exclude cash flows from uncommitted restructuring or from enhancements or improvements to assets in their cash flow forecast when companies prepare this forecast to estimate the value in use. The board will also permit value in use estimates to be made on a post-tax basis using post-tax cash flows and post-tax discount rates. Stakeholders have said that excluding these cash flows can sometimes be difficult, and estimates are usually performed on a post-tax basis in practice. Therefore, having these changes should be able to reduce the cost and at the same time make the test easier for users to understand. So with that, I would just like to pause for a while to see if anyone has any question or comment that they would like to make on this issue on the subsequent accounting of goodwill.
Jorge, si tiene una pregunta o que quieres hacer.
Sí, ahora vamos a presentar las opiniones preliminares de Glass. En principio va a exponer Juan con 3 de las preguntas que hemos elegido. Luego sigue Winston Fernández, José Luis y Ángel. Todos estos van a estar en esta segunda parte. Así que Juan, adelante, por favor.
Okay, thank you very much. Well, regarding the impairment test, the something that I was not aware, and I was not aware 16 years ago when the impairment test was introduced, is the effect of the shielding. Is the shielding effect. The shielding effect is very important, and as far as substantially all the business combinations are made to create synergies and acquire businesses integrated in the acquiring business, then it is something that the shielding effect almost nullifies the impairment test. So this is a conclusion that we have reached, that it is not possible to develop an impairment test that will be more viable, since the shielding effect destroys that effect. We discussed the possibility of having that test of the total goodwill at the date of acquisition, that is measuring what is the goodwill inherent in the acquirer at the date of acquisition, and then adding that goodwill with the goodwill of the that was purchased, compare that to future cash flows to determine if there is an impairment in the goodwill. That will be almost not equal, but similar to recording the internally generated goodwill at the date of acquisition, and based on that determine the future impairment. That idea of recording the internal generated goodwill is not new. There have been several proponents of that idea, including Sir David Tweedy, the former IASB chairman, who have loved that, but I think it's not a very good idea. So, and especially where the impairment will be applied, to the pro rata, to the acquired goodwill, and to the internally generated goodwill, all to the acquired goodwill as the financial analysts indicate it should be. It is very, very difficult and very judgmental on how to apply any kind of impairment on the total goodwill test. So that's why it was abandoned by the IASB, and I agree that it is not something that is feasible. But then we have an impairment test that in most of the cases would not work. So should we continue to have that impairment test, or should we revert to amortization? That is the big question, if we should revert to amortization or not. Okay. Then that is one of the main problems. Also, another problem with impairment test is the definition of the cash generating unit. If the goodwill is assigned to a cash generating unit, the point is it was well assigned. That's the cash generating unit to which it should be assigned. And maybe a problem will be to combine two cash generating units, one that maybe does not have anything to do with the goodwill, but is profitable, and then that also hides any kind of impairment hides any kind of impairments in the impairment test. So the impairment test has significant problems due to integration with the acquiring business, due to how it is assigned to cash generating units. It is something that, looking back retrospectively, 16 years ago, maybe I would not have voted for that. Okay, and that's my what I have to say here.
Thank you, Juan.
Okay. Now, Winston.
Winston o Juan, ¿tú terminaste con las 3 preguntas? Juan?
Yes. Well, the one of amortization is it's only on the useful life. That's one that I will have to take on because Dunya is not here. But I don't know if Winston has something to say in between.
Okay.
Regarding if the impairment tests designed in 2004, what was the opinion in 2004, if it was valid or not, and then I will take on the how to determine the useful life of the goodwill to amortize it.
Bueno, gracias Juan. Entonces pasamos a Winston.
Okay. Nice to meet you, Mr. Dehao Fang. I don't know if the pronunciation of your name is exactly, but nice to meet you. I am from Uruguay. In the GLASS working technical group, about the to choose between amortization or the concept of impairment, we have not agreed with the preliminary point of view of the IASB, and we think that even that amortization method is better than impairment method. It's probably likely is not the best, but is better. Why? Because it's more objective and it less method. The method of impairment has the problem. For example, if you are auditor, most of the participants in this outreach are we were auditors another time. You have to try to how do you trust in the impairment method that enterprise apply? It's too difficult. In the amortization method, even though it's not the best, we know that it's not the best, but we prefer in Latin America to use amortization method because you have not discussed the amount, for example, of year to year that you have to amortize. This is one of the advantage. It's more transparent, clearly, for third parties to understand what is the meaning of the amount you go to losses in the result statement and the profit loss statement. So because that most of countries in Latin America prefer amortization instead of impairment. That's one of the point of view of our technical group in GLASS. Thank you.
Gracias, Winston. Y pasamos a José Luis.
No, well, now it's. I think it's.
Hello. Oh, thank you, Jorge.
Okay.
Well, I think I would start saying that we should differentiate between indefinite useful life and infinite useful life. I think when we talk about goodwill, we are talking about indefinite. That is something that some point in time you will be able to define the useful life of such asset. The second point is goodwill depends on other assets. It doesn't live alone by itself. It doesn't stand alone by itself. So while I agree with the view that amortization should be applicable to goodwill, we don't do it because we don't have a condition to determine the useful life at that point in time. But perhaps in the future, we'll be able to do it. And how to do it? Considering that we have to keep trace of the assets, the goodwill is related. We have to analyze the condition of those assets. If they are operating in the way we predicted, it's generating the outputs that we predicted, and many other factors. So I agree that as we cannot determine the useful life of that goodwill at that point, we are using the impairment test. The impairment test is generating some undesired effects. And in my comment is basically that we have situations in which the goodwill can be impaired, but the impairment test was not effective to detect it. And certain criticism is being made on this aspect. On the other hand, I don't believe necessarily that the simplification which is being proposed will solve it, because it has to do with the accuracy of the analysis of management, that the assets that are supporting the goodwill is still in operation, is still effective, is still good. So we should focus on how we can provide disclosure on how we can determine the quality of those assets. It's important to, it's a kind of eternal discussion, amortization versus impairment test, because I recall a good example that in the banking industry, a bank grew very dramatically in 20 years, and grew by acquisition after acquisitions. And the goodwill that was paid, and many goodwills that were paid, is still there, because the bank in general was very successful and is generating return to the shareholders. So why to amortize goodwill? Because we are considering the whole picture of the bank, or because we cannot get access to the assets that generated that goodwill in the past? Because in a banking area, we acquire customers, the platform of customers. So this platform changed during the year or during a period, but we cannot say that the bank is a tremendous success because it acquired many others, or the bank is a tremendous success because it changed, because it adopted new technologies, but the goodwill is still there. So it's a very difficult discussion. So as far as we can improve the identification of the assets that is linked to goodwill, the better will be a response. No, so the point that we understand in the preliminary discussion at GLAS is that the impairment test should be improved, okay, because it's not being efficient, and the link or the disclosure about the assets that this goodwill will be connected has to be revisited and disclosed every period, right? Because it's key for a very successful impairment test in the future. And the amortization is a tool that should be used at the time you can define the useful life of this asset. So basically these, I don't know if someone else wanna add something. Thank you very much.
Gracias, José Luis. Y pasamos a Ángel. Ángel, vas a hacer la pregunta en español. Tadeu, si nos puedes ayudar, por favor.
Sí.
Pues falta la pregunta 7B que iba a ser Dunia.
Sí, al final.
Al final, bueno.
¿Cuál es la pregunta, Juan?
La 7B, o sea, la que le correspondía a Dunia. Acuérdate, Jorge, que dice que yo la ponga.
Juan va a exponer sobre la 7B cuando termine Ángel. Ángel, ¿estás allí? Sí, pero no te escucho.
Sí, ¿me escuchan ahora?
Ahora sí.
Sí. Sí, buenos días. Quería comentar en cuanto a la pregunta que señalaba de si el Consejo debería desarrollar propuestas para eliminar el requerimiento de realizar una prueba cuantitativa de deterioro de valor cada año. Si no se requería una prueba cuantitativa de deterioro de valor, a menos que exista una indicación de deterioro, ¿no? Analizando el trabajo que hizo el grupo, ¿no? En lo que ellos consideran, ¿no? Que una prueba cualitativa para determinar si debe realizarse o no una cuantitativa, ellos consideran, no respaldaron esa opinión, ¿no? Consideran que no es necesaria, digamos, en forma frecuente realizarla. Señalan que en caso de introducir, digamos, la amortización, debería ser cuantitativa en los primeros años. Señalaban también que los indicios de un posible deterioro en una prueba cualitativa deben ser significativas, deben ser robustas, o sea, deben ser importantes para poder realizarla, porque si no, no podría permitir a la administración dar una opinión cuantitativa al respecto. Lo que consideraba también, y quizás ahí viene una pregunta, si es que realmente el comité debe determinar, ¿no? Si es que es necesario o no realizar esa prueba cualitativa, ¿no? Antes de cuantificar, digamos, el hecho. Este es lo que yo quería preguntar al respecto, rescatando la opinión del grupo, ¿no? Que comentó esta pregunta, digamos, ¿no? En su análisis que hicieron en el desarrollo del GTT. Hasta ahí nomás quería.
Gracias,
Bueno,
Ángel.
gracias, Ángel. Si quieres...
Solo una clarificación, Jorge, por la pregunta de Ángel. Lo que indicaste que hacer primero una prueba cualitativa y si, por ejemplo, hay indicaciones de que tenga un deterioro de valor, entonces pasa para una fase cuantitativa. ¿Este es el punto que...?
Sí, sí.
Ok, sí.
Sí.
Okay. Yo voy a pedir a Dehao para explicar esto. Dehao, what is being discussed here is just basically you have the qualitative assessment for impairment, and then you have the quantitative, and then just how the discussion paper works with the possibility of having this first and well described qualitative test, and only if in this qualitative test there is a strong indication, but you have to perform the qualitative test. After you have this qualitative test, you have to do quantitative test. How does it interact in the discussion paper? That's the question.
Okay, can you hear me?
Yeah.
Yes, I guess in terms of this qualitative, the indicator approach that we're talking about in the impairment test. So what we are looking at is something that is not dissimilar. It's not something that is dissimilar from the impairment test that we actually do have at the moment for the other assets, say like IAS 16 on PP&E, whereby the company will still need to assess on a periodic basis whether there is an indicator for impairment, and if there is, of course, an indicator for impairment, then they will need to move on to perform the quantitative test. So by adopting such approach, so one of the outcome is that we can potentially kind of synchronize the way that the impairment test is being performed for all the assets that's within the scope of IAS 36.
Okay, just one point more, Dehao, is that it's slightly different from the situation that we have for PP&E, for example. At least I can tell you, based on my experience in my previous role before joining the board, that usually management does not make many effort to consider the existence of indicators. And maybe what could be different, if I understood Angel's comment, is that it's something more formal in terms of qualitative tests, giving a bit more guidance on how to do that. And then if based on this one, it is something that should have a robust process, that was the word he used, after only doing that, and then you go for the quantitative. It is slightly different from what we have today in IAS 38 or IAS 16, when you actually, in many cases, management actually don't have a robust process for look. They just don't see anything different that could indicate that is an impairment, then they don't do impairment test. But in this case, it would be different. They would have to do something else than just look at in a very very superficial way. That's the point.
So can I? So if my understanding is correct, so I guess what's being suggested here is to have something that is similar to what US GAAP has at the moment in terms of step 0. Although it's probably it's not an optional step 0, but it's step 0 being built into the process.
Yeah.
Whereby that's a formal test. Okay.
Bueno, muy bien. Vamos entonces a Juan para la pregunta que tenía que ver con Dunia. Por favor, Juan.
Okay, the issue is the useful life of the goodwill. A definition of asset that I once read several years ago is that cash is an asset. There is no doubt about that. Something that can be converted to cash or receivable is an asset. Inventories that can be sold and then collected are an asset. And property, plant, and equipment that can be used to produce something that can be sold and collected can be an asset. Then goodwill has to also produce something, be converted to something to be an asset. Then to be finally cash, because at the end of a business, if the business all the assets will be converted to something will be cash at the end. So the point is how to measure that useful life of goodwill up to the point that it will be converted to cash. Well, if as the special draft of the not the special draft, the discussion paper indicates, if metrics can be determined for objectives and for synergies, well, at the date of acquisition, well, also at the date of acquisition, the useful life of goodwill can be determined, because it is just a question of determining the return of investment. In how many years I can recover my investment, because that's something that always the one who is investing wants to know how it is going to recover its investment. Okay? So that return of investment is very important, because it's how it will convert to cash all what it is investing. And if as the discussion paper indicates, objectives can be determined, synergies can be quantified, also the useful life can be quantified. So our conclusion in the group is that that using the return of investment, the years in which the investment is going to be recovered, that's the way to determine since the start, since the acquisition date, which will be the useful life of the investment, and therefore the useful life of goodwill. Because it is not logical that the only thing you want to recover is the one of identifiable assets, that is receivables, inventories, property, plant, and equipment, certain intangibles as brands or patents, but also the useful life of goodwill has to be determined, and the way is the return on investment. In how many years I'm going to recover my investment? So it is something that can be determined since the beginning. Then during the years, if there is an idea of changing the useful life, then we have to consider, okay, if it's possible, can it last longer? I don't think so. And if it is shorter life, well, just a minute, then there could be an indicator for impairment. Okay. So the useful life of impairment can be determined since the beginning. Okay. I think the useful life of goodwill can be determined since the beginning to be amortized. Okay. As Jose Luis said, in the case of banks, if there is a goodwill when one bank acquires another bank, that goodwill, in how many years it has to be amortized? Well, we have to look at what happens in the banking industry. 10 or 15 years ago, people went to banks to make the banking operations. Now they don't go to banks to make the banking operations. They make it very easily at the home, at the office, with the computer. Even walking in the street with the mobile phone, they are making banking transactions. So it has changed tremendously. So what was the value? What is of the client base after 10 years? Well, it's completely different. Maybe the value that was acquired 10 years before is no longer applicable. With the dynamics of economy, 10 years, 15 years after, economy has changed so dramatically, so importantly, that goodwill acquired does no longer exist. So it has to be amortized, and since the beginning, at the date of acquisition, the useful life has to be determined based on the basis of return of investment. In how many years, I believe, management believes that I will recover my investment. So that something has to be has to be determined at the date of acquisition, and it is possible to do that because management has determined in how many years it will recover its investment. So it is easy to determine the useful life. It's not an impossible task. But some people will say 7 or 8 years later that charge in the P&L does not require cash. Well, does not require cash in that year, but it required cash 7 or 8 years before when the investment was made. So it is cash that was used that has to be amortized, and the useful life can be determined. That was the conclusion of the technical working group.
Bueno, muchas gracias, Juan. Muy claro, y tenemos un pedido de hacer una pregunta por parte de Hernán Casinelli. Adelante, Hernán.
Muchas gracias, Jorge. Thank you very much. First, a comment. In my view, the current context could help us to understand that something is not functioning about impairment test and goodwill, because we can find large companies with huge losses for impaired goodwill in this unusual year, but in my impression, we are not sure that all these losses proceed from the COVID outbreak. In this context, could it be possible that some cash flows not related to the repayment of the goodwill and other related assets were included in the impairment test of the prior years? And if yes, have you considered that some intermediate solution that combine both approaches could be better than one of two approaches? For example, an entity should monitor impairment indicator for 5 years starting from the acquisition date, and once this period expires, should begin with the amortization of the goodwill.
Yeah, Dehao, go ahead, please.
Oh, okay. Yes, I think on your second question, which is on whether the board actually did consider having a hybrid approach. So during the deliberation process for the discussion paper, the board actually did consider a hybrid approach like what you have mentioned. Say, for example, within the first couple of years, you have an impairment-only approach. Then after that, you have an annual amortization with the impairment approach. The board did consider that, but decided not to pursue that approach in the discussion paper. And part of the reason is it is quite hard to determine what that initial period of number of years would be, and that would be quite arbitrary. Although we did hear from investors, like what you have mentioned just now, for at least for some investors, that the information usefulness from the impairment test is definitely much more useful if the company actually did recognize an impairment loss in the initial couple of years following an acquisition. So perhaps that would be something that we can look at. But the board did consider this and decided not to include it in the preliminary review.
Thank you very much.
Bueno, Tadeu, no tenemos preguntas, así que si les parece pasar a la tercera parte.
Just I want to make a comment. At this time, a lot of entities have huge amounts of goodwill in their balance sheets. If there is a change to reinstate amortization, there will be a significant problem in transition, because in how many years that goodwill will have to be amortized. In some cases, the goodwill could be almost equal to the equity. I have seen here in Mexico a company that is one of the blue chips in the Mexican market that has goodwill plus trademarks that are equal to 150% of equity. maybe trademarks have their own value, and you can say they continue to have value. But if goodwill is going to be amortized, which in this case will be about 70% of goodwill, in how many years? And that's going to be a significant effect. That's going to have a significant effect on the P&L over the foreseeing years. If we consider, as I said before, that the economy changes dramatically in 10 years, should that be amortized in 10 years? And I think that management of any company is going to say, but why? Then I will not have profits to distribute dividends. That is going to be a very significant question to be considered when we're introducing amortization that I hope it will be reintroduced. Thank you.
Gracias, Juan. Tadeu, si te parece comenzar con la parte 3.
Jorge, thank you very much. I don't know whether Dehao would like to just comment this last one.
Yes, just a couple of comments. So I guess it was mentioned just now that the board wasn't aware of the shooting effect when the impairment test was first introduced. I guess when the board introduced this impairment test back in 2004 in the basis of conclusion, they acknowledged the possibility of having this shooting effect. So that was known in when the board introduced the impairment only approach. So I guess the perspective on this will really depend on what your view on the purpose of the impairment test is. If you think that the impairment test is to test goodwill, then perhaps it is not achieving its targets. However, in the basis for conclusion in the standards, the purpose of the impairment test is to ensure the recoverable amount of this CGU as a whole, in which case, if that is the perspective that you take, then the shooting effect does not really impact that. And on the issue about this simplification, I guess when the board is deciding its preliminary reviews, it's trying to balance between costs and benefits. So in the issue about this simplification, when we are talking about the indicator approach and also simplifying the way in which value in use is estimated, I guess we are focusing more on providing some cost reliefs for preparers rather than solving the issue with the impairment test, although we do think that the simplification to the value in use estimation could have some positive benefits in terms of letting users better understand the impairment test, because that is how cash flow estimates are being used in practice. But the key focus is on reducing the cost, and that is also partly to offset the expected cost increase that could potentially come from the enhanced disclosures, whereby which we mentioned in the earlier part of the slides. So I guess what the board is trying to achieve here is to balance the costs and benefits across these different proposals. So in the board's view, it is really a package of proposals rather than individual pieces of it. I guess the other thing perhaps I would just like to comment on is the last point that was being said on the transition. That is something that we, of course, noted during the discussion, but because the board decided it's in its preliminary review not to reintroduce amortization, so that was not really included in the discussion paper as much. But of course, if the board did eventually decide to reintroduce amortization, that is certainly one of those areas that we need to look further into. Although one thing that perhaps just like to highlight over here is that under a default approach under IAS 8, which where there is a change in the accounting standards, you need to apply this accounting standard retrospectively. Those retrospective adjustments will be adjusted through the opening retained earnings. So it shall not impact the current year P&L for the year when there is transition. Of course, if the board does decide to reintroduce amortization for Goodwill, that is certainly one of those areas that needs to consider more.
Yeah, but one thing that behind this comment as well, Dehao, is that because P&L, in the end of today, the profit of the year is the basis for payment of dividends in many countries, independent whether, for example, amortization or impairment does not involve cash, but it's still it is the basis for the payment of dividends. Therefore, it's quite important. And then if you have, depending on the way that you set up this amortization, you may have many years without anything to distribute and pay as dividends. That is something that just to keep in mind as part of the discussion.
And I guess also perhaps just to point out that perhaps in different countries, the regulations are different. In some countries, the current year dividend may be based on the current year P&L on the or the comprehensive income, whereas in other countries, it may be dependent on the retained earnings. So there might be some differences there as well.
Yeah, and then we know that we already have some crazy, I would say crazy discussions on whether it should go against OCI or whatever, but actually sometimes it might not solve this problem anyway. But okay, that's good. And there is another thing that I would just ask my friends in Glass to pay attention what you just said. That is the simplification of the impairment test in a way to, let's say, compensate the cost of the additional disclosures. Just to not lose this focus on some of the simplification that is being thinking about, that is to use the post-tax discount rates for those that are valuers. People see this as a very good improvement in terms of reducing costs, because that's the way it works, as Dehao said. And also now we have the restriction of including some cash flows in value in use, especially related to uncommitted investments and etc. And then removing this restriction, it will be also easier to compare the value in use and the very less cost of disposal. That's also some confusion when people are doing the impairment test. Therefore, I'm just asking when you are making your comments also to pay attention on this important simplification, whatever we are going to, because the impairment test will stay anyway, even if we reintroduce amortization, the impairment test will still be there, because if you have an indication, let's say. And then this type of simplification, it's, in my view, could be very welcome, especially for valuers when they are doing their exercise. It's just this comment. How if we can just go ahead for the third part, and then you can, for the sake of the time, please.
Okay, sure. So on the slide here, perhaps I would just like to cover two more topics that are being included in the discussion paper. So first, the board's preliminary review is that companies should present on their statement of financial position an amount representing total equity excluding goodwill. The board's view is that such an amount could be useful to flag to users those companies for which goodwill consists a significant portion of their total equity, or in some cases, it can be more than their total equity. The board also considered whether companies should subsume some indefinite-lived intangible assets within goodwill rather than to recognize them separately in a business combination. We have heard feedback from stakeholders that question whether separately recognizing these identifiable intangible assets is useful, because they are often quite hard to value reliably, and that distinguishing those assets is often subject to a complex and subjective process. Some stakeholders have also questioned why certain intangible assets that are recognized separately in a business combination, while similarly internally generated intangible assets are not recognized. So in terms of the stakeholders' view on this topic, I would say that they are mixed. Some would say that separately recognizing these assets does provide useful information that tell users what the company has paid for. And and separately recognizing these intangible assets rather than subsuming them in goodwill is therefore more useful. The board's preliminary review is that there is no compelling evidence to change the recognition criteria for identifiable intangible assets because of these mixed views that stakeholders have at the moment. On the broader issue of whether the board should consider aligning the accounting treatment for acquired and internally generated intangible assets, that's something that's beyond the scope of this project. However, we will welcome and encourage stakeholders who would like the board to consider adding a broader project on intangible assets overall to its work plan to respond to the upcoming agenda consultation that the board has. So this slide here summarizes the board's preliminary review and how they line up against the objectives of the project. As mentioned earlier, the board considers its preliminary reviews as a package of views that interconnect with each other rather than as individual isolated pieces. And so we hope that stakeholders will also consider the interaction between these different parts of the preliminary reviews when they do respond to the discussion paper, as Tadeu mentioned just now. So overall, the board has provided a set of preliminary reviews which in its view will provide better information to users on business combinations and to hold management to account for their investment decisions, while still providing some cost reliefs to preparers so as to achieve a reasonable cost-benefit balance. So that's all I have today for the presentation, and just would like to check if any members have any additional comment or questions that they would like to ask.
Bueno, muchas gracias, Dehao. En este punto, el directorio, a través del trabajo del GTT, analizó particularmente la pregunta número 8, que es si es necesario presentar el equity sin el goodwill, que es la propuesta que el IASB estaría proponiendo cuando ya sea un borrador. Nos ha preocupado esta propuesta porque si bien los argumentos del Consejo tienen que ver con que el activo es de difícil transformación en efectivo, no tiene una medición directa, sino tiene una medición residual, la propuesta de que se informe junto con el valor del patrimonio, la parte del patrimonio sin el goodwill, y en los ejemplos que tiene el discussion paper muestra entre paréntesis el valor sin goodwill, o la otra alternativa que es presentarlo como si fuera ganancias por acción al pie del estado de situación financiera, nos preocupa porque daría al usuario la duda de si realmente el goodwill es o no es un activo, dado que se está informando por separado o se está informando el patrimonio sin el goodwill. También nos preocupa la situación de que ya esa información está disponible en notas y que mostrar dos medidas del patrimonio parecería ser confuso. Por lo tanto, nuestra primera apreciación es no estar de acuerdo con esta propuesta de colocar el patrimonio sin el goodwill, ya sea dentro del propio estado de situación financiera o al pie del mismo. Esa es nuestra preocupación en este punto, Tadeu.
Gracias, Jorge. Solo para los beneficios de Dehao. Dehao, basically what George just said, that concern about the presentation of the equity without and with goodwill is that this may put in question whether goodwill is an asset. I agree that definitely someone could why I am presenting equity net of goodwill as if I have questioned whether the goodwill is an asset. The second one is that it also, the information is in the note, and then we are proposing two measures of equity. It's just causing more confusion to users. Basically, this one, Jorge, if I haven't made this correct, okay, good.
Yes, correct.
There is one team. I thought that you sent a message saying that would like to say something.
Yeah, it was actually on the previous session, just on.
Okay, sorry about that.
Yeah, just around on amortization. Maybe if we cover the questions on this section first, and then I can come in at the end.
Okay, is there any more question on this session, George, or someone else want to speak?
Well, just a clarification on the presentation of goodwill. The project of general presentation and disclosures that is the standard that we replace IAS 1. It clearly says that goodwill has to be presented separately without mixing it with other assets, so that it can be very relevant among the assets. I think that is enough. What is being asked by the proposed standard on general presentation and disclosures. So that was another reason why the technical group indicated that presenting goodwill either parenthetically or in any other way within equity, that was a mistake, since it would cast a significant doubt if it is or not an asset.
Okay, thank you. And you are not alone. We have already got some comments similar to this one in other outreach. Thank you. ¿Tiene otra persona que quiere hablar o?
No tenemos en el chat, pero si hay alguna persona que quiera hacer alguna pregunta o explicar alguna posición, va a ser bienvenida.
Hola, Jorge. Gustaría solo solamente corroborar los comentarios acerca de esto. The 2 points are goodwill depends on other assets. It doesn't live alone. So it has to be embodied to the place on which it pertains, and in the asset side as with other assets. The second point is, Tadeu, in regards to the simplification. I agree with the view that using post-tax would recognize what is happening in practice in most of occasions on which you discuss with the specialists. They think on post, and they have to do an extra exercise to go to the pre-tax. And depending on the jurisdiction, we spend a lot of time discussing it as auditor or as a preparer. So I think it was very welcome the simplification. I don't believe it will result in different conclusions, because what is happening actually is that the rationale behind all those exercises is post-tax most of the time. So it's very welcome, this measure. That's it. Thank you very much.
Gracias, José Luis.
Dehao.
No tenemos preguntas en el chat. ¿Hay alguien que quiera hacer alguna pregunta verbalmente? Bueno, Tadeu, si quieres tú cerrar desde el punto de vista técnico y desde el IASB.
Gracias, Jorge. If you allow me, I think that team, if you want to make your comment now, please.
Thanks.
This is Juan. I have another comment that there was a consensus of not including in goodwill the other identifiable assets, such as trademarks, patents, and all that, those should be presented separately from goodwill, because they are identifiable assets and not an asset that was determined just by difference between the amount paid and the amount of the fair value of assets acquired. So trademarks, patents, and all that should be presented separately. That was the conclusion of the technical working group.
Okay, thank you. Team?
I'll try again. That's great. Thank you, Tadeu, and actually thank you everyone for the feedback today. It's been really useful, and I'm sure the team here will find it very useful as well. And sort of in that vein, just in terms of the type of feedback that I think the board would find really useful. We've heard some really interesting discussions today. Just on amortization, we've obviously heard some support for reintroducing amortization today, but we've also heard in that discussion, it being said that actually neither the impairment test nor amortization are perfect. And in terms of what the board is exploring here is it's exploring whether there's compelling evidence that there's a need for a change, and that change would be a significant improvement. And so I think when sort of providing the feedback to the board, I think it'll be really useful for the board if you could give some colour to why you think that reintroducing amortization would be a significant improvement. I mean, I know we've discussed useful life today, and Wang, I think, talked about how he thought that you would be able to estimate the useful life. I mean, when the board issued IFRS 3 back in 2004, the board thought then that it wouldn't be possible to come up with a reliable estimate of useful life, and there are different views out there, and therefore your feedback on that, is quite important. But for those that do think that it wouldn't be possible to reliably estimate the useful economic life of goodwill, then what they would say is that any amortization period and any amortization charge is only ever going to be arbitrary. And so the question then would be, is an arbitrary reduction in the goodwill balance a significantly better model than we have today? Because we're certainly told by a lot of stakeholders that if amortization was reintroduced, they think that many companies would add that back in their earnings when they report to the market, because companies would say that they didn't think it was necessarily reflective of the economics of their business. And we're certainly also told by a lot of investors that they don't find amortization, or they wouldn't find amortization useful, and therefore they would ignore it. So I guess the challenge here is whether that reintroducing amortization under those circumstances would be a significant improvement. So when you do feedback to the board, I think the board would really appreciate if you just give some thought to that sort of challenge and sort of explore and expand on why you think reintroducing amortization would be a significant improvement. And the discussion you had today about the useful economic life is one of those aspects of that. So I just thought I'd make that comment.
Okay, thank you very much, Tim. Jorge, again, thank you very much for the opportunity for having this outreach. Despite we did this outreach, this is a more informal conversation. We definitely want to receive the comment letter with the comments. And also, even if within GLAS, you may have a split view on any subject, it's fine to include in the comment letter that part of the group believes that this is the position that we should follow, that another part think about that. But the most important, as Tim just emphasized it, and Dehao said this as well, I mean, that it's quite important for us to bring the right arguments for anything that is being proposed by GLASS in the comment letter. And again, thank you very much for your time, for having us, for giving us the opportunity to talk to the group. Thank you very much.
Muchas gracias, Tadeu. Antes de terminar, los invito a todos a que habiliten el video para hacer una foto grupal. Por favor, así esto lo difundimos luego en las redes de GLASS. Si pueden habilitar el video.
Aunque esté yo despeinado, Jorge.
Eso es cierto, ¿eh? Tienes un problema con el peine.
Sí.
Faltan algunos, por favor, si pueden habilitar el video.
Ponerlo, Juan.
Ponerlo.
Yo lo puse, ¿sí se ve?
Bien, perfecto.
Yo sí estoy muy pegado que llegué justo
Gracias.
de la playa en este momento.
¿Pudiste, Darío, sacar la foto?
Sí, gracias.
Darío, yo salí, ¿no? Darío, yo salí.
No te vemos.
Ay,
Sí,
¿cómo
sí,
no me
está.
ven?
Sí, Asira, te
Por
estamos
favor.
viendo, Asira, te estamos
Mis
viendo.
anteojos son más grandes que el...
Bueno, gracias por habilitar el video. Y bueno, Tadeu, muchas gracias. Thank you very much for this support in our need to discuss the exposure for the discussion paper. And thank you, Dehao, thank you, team, and all the staff of the IASB are for us very much, very well. Thank you. Gracias entonces a todos los que participaron. Por favor, sigan acompañándonos en los futuros outreach y trataremos de extender el tiempo necesario para que América Latina pueda dar una opinión fundada. Muchas gracias a Juan, que está conduciendo excelentemente el grupo de trabajo, y a Felipe, que lo supervisa, y a todos los representantes que participan en el grupo. Muchas gracias a todos.
Gracias a ustedes.
Buen fin de semana.
Gracias, buen fin de semana también.
Bom fim de semana.
Adiós.
Gracias.
Para.
Good weekend.
Todos, feliz fin de semana.
Bye, Dehao.
Igualmente para todos. Gracias.
Igualmente, a todos, buen fin de semana.